Wow, things are gone so high and so bad lately that, well, the Chicago Tribune, it's now calling out on Ken Griffin about manipulation you through draw pools. And it might not mean a lot for you, but I mean, I'm going to share with you in this video exactly why we should pay attention to this because, I mean, it's not that it's a big deal, but it's kind of a big deal. You see what I mean? All right, let's get into this. The Chicago Tribune is, I mean, I guess kind of the New York Times in New York. So it's a big journal. It's a big media outlet. All right. Now the thing is, when they talk about such articles calling out specifically an individual and a company, it means, well, this is targeted, all right? So I'm going to spare you reading through the whole article, but the juicy part starts here. Wholesalers and dog pools are, as they're known, have come to dominate a big part of the financial world, accounting for as much as half of US stock market activity, and especially targeting small-scale retail investors, people like you and I. One of the most prominent draw pools is run by Citadel Securities, owned by Chicago billionaire Ken Griffin. Draw pools typically pay a brokerage for go blah blah blah, explaining what the whole process that we already know. But if you want to kind of get a highlight of the part, is really when draw pools have built conflicts of interest. Orders routed through draw pools, through payment for order flow, etc., etc. They don't make our orders hit the lead exchange, competing each other in order for us and for everybody else in the market getting the best price possible. All right, so this also caused another conflict of interest when it comes to another problem when it comes to what we call front running, because it allows whoever is the wholesaler or the owner of this draw pool or the operator of the draw pool to actually can go ahead of ourselves placing orders in order to profit from either what we're about to do as retail or investors or against us. All right, and this is precisely why customers' orders diverted to draw pools don't get publicly reported the same way as other orders. And this is a huge issue. And I guess that's why the SEC is really trying hard alongside other agencies, all the way going up to the top, the very top as the White House, to make sure this is fixed. All right. Now, what I said this might not be a big deal, but it's kind of a big deal is precisely because the more publicity we have around this, the better, all right? Because when something comes from retail investors, we are kind of like, the babies in the whole life chain per se, or the food chain in the stock market. So we don't really care. I mean, they want us to believe that we don't really care, or they treat us as if we don't care. But we are really the 800-pound gorilla in the house. Why? Because if we decide together all of a sudden to pull all the money from the market, it's really nothing, because who is going to whose money or which money all of these pension funds, those insurance, all of these money managers are going to manage. The money is going to come from where? Because pretty much 80% of the money flowing to the stock market is coming from people like you and I, the retail investors. That's why I say retail investors are really the 800-pound gorilla in the house when it comes to market participants, all right, in the stock market. Now, the more publicity we get outside of retail investors, the better, because sophisticated people or, the smart money reading into this, it will make them a lot more curious, more curious about, okay, what is really going on with this thing? First, I heard about this on, Twitter or Reddit or, whatever. But now, reading it from the Chicago Tribune, well, it changes from the Motley Fool articles. It changes from, some of these other, articles that are negatively pushing on how AMC stock is trading or how bad AMC stock is an investment. So those sophisticated or smart money reading into this, what do you think are going to start, accounting for when it comes to the due diligence or the research or the effect it's going to have on them? Well, first off, by digging a little bit deeper, they're going to come to the conclusion that, hey, this might be a big opportunity for us to make a lot of money, especially in these tough market conditions that we are so far in 2022. So we already know that will come the time sooner rather than later where short sellers will have no choice, either because regulations will be too heavy for them to continue to hide whatever they're doing and then cutting it down, getting out, or some other black swan event, something else. The Federal Reserve increasing interest rates to, I don't know, 1% all of a sudden, something else. So it's just a matter of time. It might come from, the west, the north, the east, the south, but it's coming. That's the point. And because it's coming, if you want to get a piece of this, potato pie, well, you better start positioning yourself now. And that is the bottom line, folks. And that's why this is a big deal. See what I mean?